Ladies and gentlemen, welcome back to your favorite show, the Breaking Bitcoin Market Update. As always, I'm your host, Justin Wise. In today's episode, we are going to analyze the most fundamental question. It is May, and as they say, sell in May and walk away. We're going to look at all the data that surrounds this, from the origins of this idea of selling your investments in May to repurchase back in October, and basically sit out the summer doldrums, as they're called. We're going to look at this through the lens of Bitcoin. Is this an investment strategy? Is this a trading strategy that has worked well historically in the past? What do the fundamentals say? What do the technicals say? Is this a good time to be exiting our spot position of Bitcoin so that we can sit out these summer doldrums? Or if we sell in May, are we going to be missing out on some of the best gains of the 2023 rally? For these answers and more, stay tuned. All right, we are back. Thank you guys so much for joining me live, and those who will watch this afterwards. This is the Breaking Bitcoin Market Update, your daily source for everything cryptocurrency trading and investment. My name is Justin Wise, lead analyst and senior mentor at KrakenCryptocurrency.com. Hopefully everybody is doing fantastic today, wherever you happen to be tuning in from around this great, wonderful world of ours. We've got some exciting price action to look at today, and we've got some very interesting charts to look at. We're going to study the periodicity of this investment strategy of selling in May and buying back in October. We're also going to discuss where this idea came from. Following that, we're going to reach a conclusion on that, and then we're going to come up to current price action and fundamentals, looking at our technical levels and seeing what we can expect from Bitcoin moving forward into the next days, weeks, and months. If you guys have any questions, as always, please drop them in the live chat or leave your comment underneath. And of course, if you guys want to get involved in the community, all the links are down in the description to everything you could possibly need in life and all the ways you guys can support the channel. With that out of the way, let's get going. Okay, so we've got some very interesting charts to go over today, as long as I can get centered on the camera. And I want to start off again with this idea of selling in May and walking away. Let's just look at what the chart looks at right now. We've got Bitcoin right here, currently trading at about 27,911. We've had quite a down day today. In fact, the only thing moving today is Pepe. It was up at a peak of about 80%. Now it's dropped down about half of that, giving back half of its gains right now. So congratulations to those who were holding those tokens and who were involved in that pump. What we want to look at right now is essentially this periodicity, this historicity of selling in May and walking away. And for that, I've, of course, done quite a bit of charting. So I've done this, I feel like going back, obviously, to 2012, 2013, 2014. I feel like that's not fair. So I'm not going to be including anything in this analysis of selling in May and repurchasing in October that is prior to 2017. I feel 2017 is kind of the beginning of the cyclical nature that we've seen in Bitcoin. And it was at that point that the cycle had repeated enough that we kind of believed it. You know, this halving cycle of this run up starting about a year prior to the halving, and then the bull run, and then following about 2 years of bear market leading up to the next halving. And so this cycle has been repeating like clockwork now for the last 6 years. And we're going to continue following this pattern because it's been very, very spot on with everything that we've been doing in the markets. Okay, now, hey guys, thanks for being in the chat. All right, so the first thing we want to look at is let's talk briefly about what is the origin of this kind of idea. Well, the idea in the stock trading world is that you want to sell your investments or sell your positional trades in May and walk away and then come back in October and repurchase. And the reason why, it's very just kind of ad hoc, or what's the word I'm looking for? Anecdotal. But the best justification for this I've seen, and I'm sure there's some good back testing out there to support it, but the general idea is that in the summer, lots of individuals or lots of companies are going to go more on break. Lots of officials are going to take breaks. And so just the summer is less trading activity, less volatility, less to do because it's not cold outside in many parts of the world. So we're not stuck inside staring at the charts obsessively because that's all we've got going on. No, it's summer. We're out on the beach. Yeah, who cares about price, this and that, right? So anyways, the general consensus is that this is a profitable investment strategy to sell in May and walk away and come back and repurchase your assets in October. But does it work with Bitcoin? Does it work with Bitcoin? So I've marked out all of the Mays and Octobers, and I've gone with the middle of the month approximately. And we can see that from May 2017 to October 2017, if we had followed this advice, we would have missed out on 213% approximately of gains. Because of course, there toward the end of 2017, this was one of the biggest runs that we'd ever seen in cryptocurrency's history, ultimately culminating in the December 2017 top at about 20,000. Now, selling in May in 2018, okay, let's say you had purchased in October and then you sold in May, okay? You still would have made a gain. Of course, you had this big profit opportunity, but you still would have made a profit. And selling in May and repurchasing in October would have let you sit out about 31.25% of losses. Okay, so not a bad strategy. In 2018, we were in the depths of a bear market there. We had been ranging across that 6,000 support for the better part of a year. But unfortunately, November 2018 happened and we crashed another 30% down to 3,500. And that marked the bottom of that cycle. So, okay, so not a bad opportunity to do it here. Good opportunity to do it here. Didn't time the bottom, but okay. Purchasing in May of 2019, selling in May of 2019 and then repurchasing back in October of 2019 just made you miss out on about 17% of gains and missing this profit opportunity right here. Selling in May of 2020 and repurchasing again lets you miss out on about 25% of gains. And then finally penultimately in 2021, selling in May and repurchasing again lets you basically miss out on all this, but you bought back at the exact same price. So nothing's very conclusive here. Nothing super crazy. Let's actually switch to the big chart so I can show this in a little bit more detail. And then finally, if we zoom in here on 2022, selling in May and repurchasing in October lets you miss out on about 37% of losses. But again, we still had the FTX collapse coming at the end, but ultimately not too bad. So what's the big takeaways from this? One second, I'm just going to get my OBS here like this. All right, so historically, what we can see from this exercise is that typically selling in May actually results in missing out on gains. Now, if you do sell in May during a bear market and repurchase later, you tend to save money. You tend to miss out on losses. But anytime price is going up on average, selling in May and coming back in October just lets you miss out on gains. Now, let's code this up. Let's actually see how good this is with a strategy tester. So I slapped together this quick code right here, and we are going to add this to the chart. This code is very simple. This Pine script is very simple. I've got a 200 period simple moving average. We'll talk about that in a bit. And then just two simple conditions to check if the month is May or if the month is October. These variables are initially initialized as false. And then I have two if statements here that's just checking to see if the month is number 10, then month is October is true. And if the month is 5, month of May is true. And then we're going to color the backgrounds. We're going to add a time check to make sure we're checking everything after 2016. We don't want to check anything prior to 2016. And then we've just simply got our long condition and our close condition. If month is May, we're going to be selling. Okay, so let's go ahead and I'm going to copy this here real quick and paste. And we're going to go ahead and comment this one out and this one out. And delete this condition right here. Okay, so first we're just going to check if buying in October and selling May flat across the board. We're going to see if that's a profitable strategy. Okay, let's pull our strategy tester up. So this is a profitable strategy with Bitcoin, buying in October and selling in May. And this is just doing one contract or 1 unit of Bitcoin, so one whole Bitcoin, does end up resulting in a 4.15% profit. Does end up resulting in a profit. The strategy is correct about 60% of the time. It's got a nice profit factor, very low drawdown. So the net profit to max drawdown is obviously very attractive, but the total amount of gains is not. And so just relying on this kind of ad hoc method of buying in October and selling in May isn't really doing anything. And digging down into this, we can really see that if we look between the lines, what we're really seeing is whether or not it's a good idea to sell in May really depends on the market cycle. It's not, just the fact that it's May, just the fact that it's October. Overall, I would say based on everything that we've seen, on average, Bitcoin breaks this equity trading idea, where in equities, it is considered universally profitable to sell in May and repurchase back in October. In Bitcoin, it is almost universally true that that is not the case. But what's really happening here is that it's very dependent on where we're at in the market cycle. In every circumstance where Bitcoin has already done its bear market movement, put in a low, and is on its way back up, selling in May only results in missing out on summer gains. And we can see this in 2017, where we miss out on 214% of gains. We can see this in 2019, where we miss out on 17% of gains and miss this whole area of the market right here, opportunity to sell. And we also see it, of course, in 2020, where we miss out on 25% of gains because the market did put in a nice movement to the upside there. However, when Bitcoin is in a bear market, when on average we are moving down. So to make it very simple, if on average we're moving up, it's more profitable to hold and not sell in May and buy back in October. And if we're in a bear market, if prices on average moving down, it is more profitable to sell in May and come back in October. And in fact, I would seem to be a little bit past that, like sell in May and buy back the next May maybe. But really it's like January. January tends to be a good bottoming month for Bitcoin. Okay, so with that in mind, we have to take a look. Let's go back. Let's look at Bitcoin right here. Are we in a bear market? Have we put in a significant low and are we on average moving up? Or are we in a bear market and are we on average moving down? Excuse me. Keep getting calls. As soon as I go on stream, everybody wants to call me. Okay, so I think the definitive answer to that question, rhetorical, I think the answer is no. I do not believe we are in a Bitcoin bear market. Price is above the daily baseline and we are on average moving up. The slope of everything, the slope of every moving average is moving up. All evidence would suggest that we have put in a significant and long-term low coming off the collapse of FTX. We've had the protracted bear market. We've put in the time that was necessary. And then we had the catalyst event, the collapse of FTX exchange, and a big shakeup that was kind of that black swan event pushing us down to those lows below the cycle lows of last cycle and putting in that long-term bottom. On-chain metrics, of course, complement this analysis because we continue to see all major metrics for everything across the board continue to rise. Growth and adoption rising, median transaction volume rising, literally everything. Liveliness continuing to go down, indicating that long-term holders are content to sit and hodl on their coins and not to spend their coins into the current market froth. So lots of indications that we have put in a significant low and that all of our metrics are rising. And honestly, you really only need the chart. Prices are moving up. You really don't need anything besides that. But having all this evidence to help complement these trading ideas or these trading decisions can help you make more informed decisions and make you feel more confidence when you do come to those conclusions. Okay, so let's go back to our automated strategy here and let's just make one simple adjustment here. And we're going to add in that simple moving average, 200 period simple moving average. And we are going to use that as a condition. We're going to use that as a very simple way to track whether we are in a bull market or whether we are in a bear market. If price is above the 200 period simple moving average, we're going to consider price bullish, which means we're not going to sell in May if price is above the 200 period simple moving average. And if price is below the 200 period simple moving average, we're going to consider the fact that we are in a bear market and we are going to sell in May and repurchase back in October. So let's add this to our chart. Okay, so we have a 2.51% profitable strategy. Our strategy is right more often. It is less profitable overall, and our average trade has almost doubled in size. Okay, so again, all we've done here is we've just added in a filter for whether or not we should exercise this strategy of selling in May and repurchasing back in October based on whether or not price is above or below the 200 period simple moving average. We could have done any number of things. We could have looked at the slope of the 200 period simple moving average. We could have done any condition you could possibly think of, but we've just kept it very simple for this example. Okay, so taking a look at this initially, it does seem like we've made our strategy worse. And on paper, clearly we have. But if we look a little bit closer, we can see that what we've done is really opened ourselves up to more opportunity here. So as you will recall, previously, we were selling and we were buying and selling every year. We were buying every we were buying every October and we were selling every May. And what we can see here instead is we're only buying and selling a couple of times. In fact, we're basically doing almost no transactions from 2018 to 2021, which was the most profitable time to be in Bitcoin in the last 7 years. So let's look at what happened here. We purchased in October of 2017, and we held that until May of 2018. So we were able to experience a 146% gain. And then we sold in May, so we missed out on basically almost all of the bear market of 2018. We did, of course, purchase in October of 2018, which was right before the collapse down at 3,500. But we held that position. We bought it $6,000, $6,000, ladies and gentlemen, and we held that to $37,000. It's about a 438% return. Not bad. And of course, we were in there for all the ebbs and valleys, all the opportunities here. We did buy in October here in 2021 after the 50% collapse in the summer of 2021 and the movement back up. And then we did sell in May prior in 2022, which means we bought at about 48 and we sold at about 38. So a 20% haircut right there, 450 some percent. What is it? Oh, sorry. Here we go. This is the one. Yeah, 487% some gain, 20% loss. Okay, we'll take that. And then we bought back. Listen, this is how savage this strategy is right here. We bought back in October of 2022 at 18,000. And we're still holding. And we're still holding. So, ladies and gentlemen, you probably know this. You guys probably know this. The less you do with your trades, the better, generally. One of the best pieces of advice I often give to newer traders is if they're actively trading, once they open up a position, close the screen. Don't look at it. Enter the trade, set your stop loss, set your take profit, and then look at something else. Don't look at the trade until it's over with. You either hit your take profit or you hit your stop loss. And there's no need for you to sit there and watch it. Watching charts all day is like watching paint peel, punctuated by moments of sheer terror, as John Ehlers once told me. And there's just no need for it. You could be doing so many more productive things. Backtesting new strategies, coding, learning, skills, hiking, camping, taking the dogs for a run, anything that you could possibly do. Sitting there and watching the chart is only going to mess with you mentally and emotionally. There's really no need. There's nothing you can do that's going to improve the outcome of that trade. In fact, the more your fingers touch the mouse and the keyboard when you have a trade open, you exponentially increase the odds that you're going to screw something up. Are you making money trading? If the answer is no, if you're not consistently making money and you're doing this, where you are opening a trade and then watching it and then maybe moving your stop loss and the take profit and maybe entering it out, oh my God, red candle out, try not doing that. Open up a trade. Close the screen, walk away. Only check it when something happens. And I bet you your trading you might experience a 50% increase in your trading ability just from that one simple trick. So again, with investment strategies, it is not a lot different. It's not a lot different. We're looking for a strategy where we don't do very much. And this strategy right here, this simple strategy, just simply adding that 200 period simple moving average gives us the opportunity to avoid trading too frequently and look at these massive runs that this strategy allows us to partake in. That's absolutely stunning. So overall, I think this strategy, although on paper slightly less profitable, half as profitable, is the better strategy. This is the better strategy, ladies and gentlemen. It allows us more room to breathe. It opened us up to the breadth of the trend. And that brings us to now. Are we in a bear market? No. We are above the 200 period simple moving average. We are above the 200 period Donchian. Prices on average are moving up. Okay. In addition to that, we have a lot of conjunction with our growing on-chain fundamentals. All right. So historically, what we identified with our little exercise is that selling in May and buying back in October is a viable strategy when we're in a bear market, but without fail, when exercised in a bull market, with the exception of 2021, it resulted in missing out on gains. There are no summer doldrums in a bull market for Bitcoin. There are summer gains. Historically, there are summer gains. So our historical strategy would suggest that the answer to today's YouTube 20% haircut for me is... Oh, man. It's not many hairs, man. They're tiny. We're taking beard hairs. Oh, we're taking beard hairs, mate. Okay, so our historical strategy would suggest that based on current evidence, that price is in an uptrend, that we are not below the 200 period simple moving average. Our technical strategy suggests that we should not. The answer to the video's title is no. Our strategy suggests that you should not sell in May and walk away, that you should hodl in summer, or else it'll be a bummer. I'm going to work on that one. I'll get back to you on the next episode. Okay. Onwards. We got a lot to talk about, guys. So let's get back to the chart of Bitcoin here, and we'll actually switch over to the bigger view. So give you guys an update on the technicals. Obviously, we have a lot going on here. Obviously, Bitcoin is broadly in an uptrend since the beginning of this year. We have currently rallied to our last level of resistance that we experienced in 2022. The last up thrust that we experienced in 2022, anywhere near these levels, prior to a catastrophic sell-off and the near bottom of the bear market of 2022. So this is a very logical area to have run into resistance. As you guys can see, price after we reached this bottom came up, broke out of the range, so broke above the support, formed a new range right in the value area of this previous range. We pulled back to support here, did a nice bump and run, breaking above the range high, and now we've been accepted into this value area right here, where we saw lots of distribution and lots of buying. So lots of market activity occurred in this region previously when we were back in 2022, and we're seeing the exact same thing. And what's happened is we formed a nice range with support at 26,000 and resistance at 30,000. Now, since we are in a bullish market, buying range breakouts is one of the simplest and most profitable strategies. In fact, it is one of the strategies that I'm working on right now on fully automating my range breakout strategy. Yes, that is 11,000%. Okay, so this is relatively simple, right? Range breaks of $30,000 should be longed with prejudice. Let's go look at where our next target area is. Right here. Our next target area is $35,000 to $37,000, and that's just going to be our ATR projection based on our current range. Again, we also another logical area, look at where we had significant demand going back to 2022. So this would be the next area. This would be the next area of liquidity for the markets to drive towards on a range break of 30,000. Okay. Support at 26,000, a break at 26,000 at this point. We'll talk about this in a second. Break at 26,000 is going to dive us likely down to the $24,000, $23,000 area. And we'll have to make a very important decision at that point in time. Now, again, fundamentally with the on-chain evidence that I'm seeing and the growing technicals, I'm very bullish for this cycle. So I don't want to squander. I don't think traders should be looking to squander their positions here. So definitely a spot holding of BTC, I think, is the way to go. Of course, if price does get down here, you do have to, of course, make a very important decision. Are you going to hold to that conviction, or are you going to manage the risk of your trade? Now, obviously, if you're in from 16, 18, 20, it doesn't really matter at 24. You don't have to make those decisions yet. But, are we going down? What happens if we do make another dive down for the range lows at like 18 or 17? What if we see that, right? Let's not mince words. We're not completely out of the woods yet. I mean, let's go back and look at, every significant bull market that we've had. Let's just look at these 2018 lows down at 3,500. Massive rally. Massive rally to 14,000. And then slow, deleterious sell-off to 4,500, right? Devastating. Okay? So, I believe that we will not escape with a clear vertical at this point in time. We have, of course, achieved escape velocity for profitability, but a dive down is completely possible. And whether it's going to be sharp and sudden, whether this is the end of the explosive rally that follows off the bottom, I'm not really feeling that. I do think 35.40 is more likely at this point in time. But we'll see. And obviously it's very easy to trade, of course, too, because we've got very clear delineated resistance at 30,000. We've got support at 26,000, and you can make those decisions there. You want to be more biased, of course, to the long trades, holding that spot BTC here. But in addition, of course. We can also play the range, right? We can just buy support at 26, look to sell at 30, and rinse, repeat until you get a break of the range. This is an area where you can range trade. Now, in addition to the range, in addition to everything we just said, we do have to, of course, keep our eyes on evolving market structure. And what we do have, of course, is... There it is. We do have a head and shoulders forming, though. Okay, and historically, head and shoulders in Bitcoin play out pretty decently as far as technical patterns go. You guys know that I'm not a huge chart patterns guy, but I'd be remiss if I didn't point this out. We do have a very clear left shoulder, head, and right shoulder forming. With the biggest thing in crypto to watch for is the size of the candles and where is the volume going. So obviously, we rejected from resistance here at 30K, and we came up for a swing failure pattern. So we formed a lower high following a yearly high. And we've got big volume on the sell side candle here, 5% candle down, a lot of volume on this candle. And we're quickly approaching that diagonal trend line right here. I've drawn it out with a trend line. I've also had it projected from the head and shoulders tool that's here on TradingView. And again, that level is coming in right here at about that 27.2 mark. So 27.2, and a measured move puts us down slightly below the daily baseline at about 23.2. Okay. So if the head and shoulders plays out, we've got a measured move. What is that measured move in terms of percentages from the break of the trend line? So about a 15% move to the downside potential on a break of that trend line. Now, should that scare a bull? I don't really believe so, because look at what we did back here at the end of March. After we really had that explosive movement up from the 2023 lows, the yearly lows, and we sliced above the previous range right here. We put in a higher high, and then big move back down, faking out that daily 200 period dawn chain. But then we rallied and broke range again. So this can absolutely be the pattern. Do I really like thinking that, oh, this is the most recent thing I can see on the chart? It's right there. So clearly what's going to happen next is going to be just like that. No, that's a really fallacious way to do this, or to view the charts. But you want to be aware of this. So overall, we've got a very bullish market. I think that individuals should be holding spot BTC right now. I don't think individuals should be holding Ethereum right now relative to Bitcoin. And we only need to look at the ETH Bitcoin chart for that. The ETH Bitcoin chart clearly tells you when you should be in Ethereum or when you should be in Bitcoin. And Ethereum Bitcoin is trending now. Excuse me. I don't think there's any reason to hold Ethereum right now. We had kind of the fundamentals, we had the unlocking, we had the sell side pressure coming in, and Ethereum is just simply not outperforming Bitcoin right now. So there's really no reason to hold Ethereum, just hold Bitcoin. So I think Bitcoin should be the spot position of choice right here. Bitcoin should be the spot position of choice right here. And a principled move at this level, a principled trade could be a head short, right? I think that obviously anytime you look at taking momentum shorts down below levels that aren't in the direction of the prevailing trend, you're kind of asking for trouble. That's literally when you get those fake outs. So we're clearly looking for range breaks of 30,000. And why is that justified? It's justified because price is above the daily baseline. and prices on average moving up. So we are going to take the risk that if price continues moving in its dominant direction, that it's going to continue moving there, because breakouts are powerful and those are some of the most profitable trades to catch. But when we're looking at breakdowns and prices bullish, I mean, you're banking on a lot of things there. You're banking on the trend to break. So the fact that we're a little bit away from there gives you that opportunity now. The other principled way to play this, of course, is to simply like kind of ignore this for now, or be aware of this, and then remember back to the support and resistance, and just simply trade the support and resistance here, and then trade the range break at that point in time. So basically long, and then maybe look to enter if price does not break out here, if price falters either with a lower high, or if we even sweep this high, but we're unable to make it above 30,000 on a closing basis, then looking to actually kind of catch a top here, which again, you know, I'm more into follow the leader, guys, but price is ranging right now. So there's going to be opportunities. It's all going to come down to your trading style. But I think I'm not worried at all of price going to 23.2. I think that can happen. And then we move for a range break. So again, very similar to what we saw right here. But again, once we hit that 23.2, I mean, you have to ask yourself the question as traders, like, what do you want to be doing with your position? I think in the long run, these are attractive entry spots for what we're going to see in 2024. But in the short run, you know, are you going to hold your long position? Are you going to hold your spot position from here to here? Obviously, depending on where your entry is, without doing a hedge. Okay, so I think you could take advantage of that early hedge now, or at a slightly higher price if we fail to break 30K. Or as a last resort, as a momentum short on a breakdown from this head and shoulders trend line. Okay. So pretty simple analysis, guys. Pretty short, quick, and to the point. So let's go to the chat here real quick and just say what's up to everybody. Diggs, by the way, 7 over on Twitch. Hey, thanks for joining the stream, my friend. Mr. Ether Robert Warner, I am always alive, my brother. Ron Legato, we've got Yes to Crypto in the house. Oh, thanks, man. That like button has been nasty. Hit that like, guys. Philip Carr, good to see you, my brother. Jordan Stotts. Jordan Stotts asks, if you buy Bitcoin every Monday, do you make a sell by end of week 100% of the time? No. So most of you guys know this, but I participate in this thing called Money Monday. Okay? Money Monday. So every Monday I make a long-term investment. I have been buying Bitcoin and Ethereum for quite a while now. I am now purchasing physical gold and gold mining stock. Gold mining stock is extremely cheap right now. And I think that I do believe that gold is going to reach new highs on this market cycle. So no, when I buy on Mondays, I don't sell by the end of the week. So I'm just adding that into my long-term holdings. And that is the way to build up. You just have to invest. The way to invest is just to invest. If you don't put your money into the market, it's just never going to get into the market. It's just not going to happen. Okay. Excuse me. All right. We'll get a little bit of music and bear with me here for just a second. Let me make sure I'm not blowing your ears out. Still not hearing it. Okay, that's not too bad. You guys let me know if it needs to come down a little bit. Okay, next. Okay, now I can mute that. Let's see here. Cryptonomics, good to see you, my brother. He says, what was the risk management rule of thumb you use when trading on Bybit leveraging? I forgot. Say a short with an account value of 10K. I mean, the most classic rule of thumb that I teach with trading in general is just to understand your risk per trade, and what the maximum negative outcome of any individual trade is going to be in terms of percent of your account. So you want to structure your position size. Everything comes down to position size. If you know, it doesn't matter what leverage you use. It doesn't matter whether you go long or short, as long as your position size is correct relative to your stop loss. So your position size should be such, big enough or small enough, such that when your stop loss, if your stop loss gets hit, you're going to lose X% of your account. And I recommend no more than 2% of your account. If you're a beginner trader, you should keep that number very, very small. Something like 0.5% or even 0.25%, so that you can kind of build up that experience. Because unfortunately, I don't think that trading on testnet is the way to go. I think that anybody teaches you to learn on demo, like, doesn't really, it's just not real. It's not real price action. I mean, obviously there's an argument to be made for demo, but in my experience, it's much better to just put $100 into an account and risk and then just trade appropriately. Because if you can do that, with $100, then you'll be able to do it with $100,000. But if you put $100 in your account and then you blow it, well, you don't have the risk management to handle a larger amount of money. Like, you need to be able to put $100 in the account and then trade for a month and still have money in the account. Ideally, more money than you put in. But, you know, if it's a little bit less, like if it's more than $80, yeah, guys, well, that's 20% down in a month. I mean, you know what I mean? So just all these things. But having just a key grip on your risk is really what separates really good traders from not good traders. Yeah, we've all been there, man. Yeah, I bought Dogecoin cheap too. You know what I mean? Like, you guys are amazing. Okay. All right, we'll do a quick pause for the cause. This is going to be the shameless promotion plug. Thank you guys so much for all your support. If you want to support the show, if you enjoy what we're doing here, of course, like button is down there. Make sure to subscribe so you don't miss a market update, and an update where we talk about trading strategies, ways to trade Bitcoin, how to improve your trading, how to understand your risk, how to write code, how to codify your strategies. All of these things we cover for free here on the channel, and of course in much, much more detail in our private group. Link to all that and all the information is in the description. I do have a new guide, the 5 mistakes holding you back from profitable trading. This is a great little guidebook that I put together to really put people on the right track who really want to improve the profitability of their trading, but just don't really know where to start, don't know where to struggle with. I've identified the 5 most common mistakes I see new traders that I've mentored make, and I go over anecdotes and I go over actual ways to resolve those issues in this guide. It's absolutely free. Link in the description, 5mistakes.crackingcryptocurrency.com. And then, of course, you guys can get the book, How to Succeed with Your Cryptocurrency Trading. It's $7. This is a much more beefy book that I've put together over my years of trading, and really gives you a good idea of how I trade, how you can build a completely technical, purely objective trading strategy from the ground up. I show you how to do it all. So definitely good opportunities for you guys out there if you haven't taken advantage of these. Okay. With that out of the way, we can really get rid of, so that's our long-term view. I think the very principled move is the short here at this point in time. And, you know, as far as the rest of the market right here, again, we've got a down day, nothing too exciting. Obviously Pepe is kind of flying, and we'll actually take a look at that just for fun. I don't think we're going to be able to find it on, I think we're going to be able to find it. Maybe we will. Yeah. Bitget. Yeah. Here we go. So here's Pepe. Let's see, what do we got going on right now? Current market cap is about 412.78 million. 24-hour volume is 475 million. So more volume than market cap today. And since its launch on Bitget, it is up about 423%. So this thing has been on a real tear over the last 4 days, and probably prior to that. Like, what was it on? Did it list on MEXC? No, it listed on MEXC at about the same time. and doing kind of the same thing. Gate.io, yep, all listed at about the same time. Even on Poloniex and CoinEx, yeah. So, thanks, Philip. It's strategy.krakencryptocurrency.com. The link is in the description, my brother. Okay. Okay, so what do we got? What really do we need to be aware of this week, and what's really going to be influencing the markets this week? Well, we've got FOMC. We've got FOMC in 2 days. The market is obviously pricing in another 25 basis point rate hike. We had PMI come out today. We've got unemployment this week. We've got another PMI, and then Friday we'll also have the first post FOMC speaker meeting. So a lot of opportunities, big catalyst this week with regards to the FOMC. I feel like the market is already pricing in a little bit of a negative reaction here, or a negative movement. And we can really see this, of course, from ES. So again, ES here, looking at the NASDAQ futures, forward futures. Again, nice push over the last couple of days to the upside, and now just struggling at that resistance level. That same resistance level that the NASDAQ's been putting in here not the NASDAQ, I'm sorry, the SPY. That we've been putting in here for a while. So 4182 in current failure. I do kind of like this though. As far as the SPY goes, I think we absolutely have the potential to rip higher moving into Wednesday. And then, maybe even continuing on depending on what happens on Wednesday. But almost assuredly, we're going to get that 25 basis point hike. We might not, but I would be very, very surprised if we did not. Be very surprised if we did not. Let's see here. There's some market buying going on with Bitcoin right now. Let's just get to normally we do day trading on these videos. I just wanted to go over the analysis here. And we'll get back to that here in a little bit. Yeah, so let's just kind of break today's market structure now. All right, so again, just even on the 15-minute, which the hour is actually going to be slightly better for this. But I mean, the power of the 200 Donchian, guys, on just about any time frame here is really hard to understate. So yeah, we again on the hourly we've slipped. I do think the principled movement here, as I said, on the daily, is to be looking for that establishing entry right now. Now, again, you can avoid this entry right here. You don't have to enter at this low. There's absolutely no reason to do that. And you don't need to use a large position size either. If we're looking for 30K in validation, yes. If we're looking for 30K in validation, then what are we looking for? We got about a 10% distance to the stop loss, or to the invalidation area of the trade. And to the downside, well, to the downside, something like this. Again, 23.2. So what's the risk to reward ratio? 16%. And if we're using, let's say this high, again, you can cap risk at 10%. So you got a 1.5 to 1 risk to reward ratio. So again, you can avoid that. You can wait and see. You can wait and see, because if you lose your opportunity, well, that's fine. You can just wait and look for the opportunity to go long, which is the dominant direction of the market and is the safer thing to do. S&P 500 is flirting with its February high and rejecting. Yes, exactly. And let's look at too, by the way, let's look at there we go. Perhaps the only chart we need. This is the balance sheets of the central banks, the best we can calculate them as far as TradingView goes. And as you can see here, we are decreasing the balance sheets right now. Federal funds rate currently sitting at 4.65. I think it's 4.75 actually, 4.75. And a 25% basis hike would take us to 5.25. We want... Here we go. 200 daily. We want, yeah, the 200 daily average. As far as the regular stock market right now, again, this is one of the most helpful charts out there. This is S5TH. This is all the S&P 500 stocks that are above their 200-day moving average. And you can see we hit a low of 2%. But again, this just goes from 2 to 100. And typically, the best opportunity to purchase is when this is low. So when everything is below its 200-day moving average, typically a good time to buy. And lots of different ways to trade this, but we can see this. We are coming off the lows in this case and now just kind of consolidating around the middle. So a lot of indecision. And on above the 20-day average, again, we were doing nice and now kind of pulling back over the last 4 days. Individual equities are. All right, it's almost time. Let's do our quick daily scan and see what trading opportunities we have. For those of you who don't know, I practice a methodology of trading called Pathways to Profit. It is a strategy creation process that allows you to build completely technical indicators and signal systems from the ground up. You do not need to know how to code. I have taught thousands of people how to do this from all over the world, from all walks of life, from all different skill levels. This is not complicated. So we're just going to be looking through my alpha list. These are the assets that I'm actively interested in trading. We're of course going to go to the daily time frame, and we are going to simply make one little adjustment here. Okay. Okay. Get rid of that, and we are going to use the 55 EMA. All right. ETH, again, I'm not interested in holding ETH. ETH is not performing as well as Bitcoin right now. In fact, we can see, again, Ethereum obviously had a nice ride leading up to the Shanghai upgrade, and Chappelle is coming, but again, drop down, a little bit of consolidation at the 55 exponential moving average, and now currently a breakdown of that 55 moving exponential moving average. Again, this is negative unless we see a breakout of like 1935. break above these range to maybe go up and sweep for the $2,000 highs, but I really doubt it. I really doubt it. This thing, I mean, the 200 period Dawn chain 1689 just seems like a magnet right now. So, I mean, 6.78, you could even take this short. That is definitely a trade idea. The 6.78, what's the invalidation? It's about a 1-to-1 risk to reward ratio. Obviously, you could keep it tighter. You could go the top of this daily candle, maybe. Yeah, the top of the daily candle at 3.77. They give you about 2-to-1 risk to reward ratio. But look for the bounce, the reversal baseline bounce off of this, or we might even be looking at a trend shift in Ethereum to go down below that baseline. Obviously, Bitcoin very similar here. Here we go. Bitcoin very similar here, of course. Nice run up and currently testing that 55 exponential moving average as well, coming up on that basically support level and forming that head and shoulders pattern that we just talked about earlier. A break here, and I mean 12% to the downside, guys. I mean 24, and then we can reassess right there. Look for the reversal baseline bounce, very similar to what we got over here. Overall angle of the 55 EMA is still obviously upsloping, so the trend is still bullish. Ethereum name service, a very negative, below the 200 period Dawn chain, and the 55 EMA sloping down, currently making new lows for the year. Not good, and right at a previous level of support and not showing any support whatsoever, so not good. Matic looks like crap, down, trading below the 200 period Dawn chain. 55 period EMA is also sloping down, makes everything in negative territory right here. We will, of course, it's always a good idea to have bottom feeder on at these points in time to try to identify market bottoms as well. Yeah, I'm not really liking this bottom feeder signal, and now we're of course hovering toward the thing. So no, thank you. BNB USDT bottom feeder gave us a beautiful signal right here, and catching this movement. Bottom feeder wants to see this at 349, and this is totally fine. We're just BNB is not really doing anything. You can see we've been consolidating since January. BNB really hasn't done anything since January. I mean, it's tested this resistance at 340 like multiple times. Bottom feeder is wanting a bit of a breakout here, wanting us to find support. We are, of course, holding the 200 period Dawn chain since the end of March. So just consolidating above it. We have put in a higher high. So maybe if we can find that bounce for BNB to hit that 349, then bottom feeder be happy. I don't really see a trade right now, except for if you had the opportunity to get on this bottom feeder signal at support. Now, not so much. Solana, again, consolidation, very much like BNB, but a little bit more negative. Very much more time below the 200 period Dawn chain right here. The 55 EMA is beginning to slope up here a little bit and look a little bit better, but this is just not an attractive looking chart to me on the daily time frame. So there's just no momentum. Polkadot, very negative. I would be short this asset right here. There's just no reason. This is below the Dawn chain. EMA sloping down. Minx negative. Wadatar explosion negative. Wadatar told you to short here. Avalanche, again, very, these altcoins all kind of look the same. They really just haven't done anything all year. Like, yeah, they put in this little run, but this is nothing compared to like what Bitcoin did. It's kind of rough. Cosmos, Atom looking like crap, downtrending. Bitcoin is outperforming. Altcoins are just not juicy right now, not attractive. Bitcoin is outperforming altcoins. Chainlink, same thing. Price downtrending. Below the 200 period Dawn chain, below them. Nowhere near oversold. Bottom feeder's nothing. Kronos, bottom feeder caught this trade right here. Beautiful, hitting the take profit. Right, and again, it kept, just rejecting from the baseline, trading back down below the 55 EMA right here. Kronos does not look great here, guys. Near, this is the worst one we've seen so far. Yeah, this one, Near's pretty bad. Bottom feeder not catching these bottoms on the altcoins well this week. But again, you don't want to be taking these kind of trades. These are for like real bottoms. If price is below the 200 period Dawn chain, you're not taking bottom feeder signals on the daily. You're taking bottom feeder signals on the weekly. Okay. When price is actually in a downtrend, we're not trying to catch the falling knife. That's not what we're doing. We are looking to trade with principle, and we use our automated strategies. Bottom feeder is our most popular automated strategy, but we look to use our automated strategies to guide our trading decisions, not to follow them blindly. We have to have a rhyme and a reason. Algorand, Algorand's looking rough, guys. Below the 200 period Dawn chain, 55 EMA sloping down, making lower lows on the year. Minx down below, nowhere near oversold. That's bad. Insane Clown Posse. Again, are these altcoins looking very similar to you guys? I mean, they just haven't done anything. Yeah, you want to call this a run? That's not a run. This is not an altcoin run. Hedera Hashgraph, a pretty impressive run from January to February, but just downtrending ever since then, and now negative, back in negative territory. I'd be short that asset. eGold, again, hasn't done a goddamn thing. Tezos, hasn't done a goddamn thing. Theta, hasn't done a goddamn thing. Decentraland, hasn't done a goddamn thing. The Graph, hasn't done a goddamn thing. Litecoin, I mean, this is the best looking chart we've seen in a while. Look at Litecoin. Litecoin did better than all of them. And Band, I don't know, goddamn thing. So not a lot of alpha here, guys. I would be short most of these altcoins to Bitcoin. They're looking pretty crappy. They're devaluing in terms of USDT. They're devaluing in terms of BTC. I would be holding spot BTC, and I would be seriously considering a hedge short, breakdown short, taking the long at support, trading the range, and then looking for the short entry up here. But this red candle is concerning. After the hitting resistance, lower high, head and shoulders forming, this is concerning. For the long entries here. I mean, you can also just absolutely do nothing, wait until support, buy the support, and then, like I said, either look to sell the resistance or sell the resistance. And then, of course, I mean, the number one thing you must do is buy the range breakout. And that's about all we've got for today, guys. I want to thank everybody for joining me for another exciting episode of the Breaking Bitcoin Market Update. It's always fun to be back on the streams, and I'm going to be trying as regular as I can. Pretty soon here, within the next 2 weeks, I'll have the new recording studio all set up. That's kind of kept me from doing the regular streams. This office is great, but in my recording studio back. So that should be done within the next couple of weeks, and hopefully we can get back to regular enjoyment and make money on this bull run together. If you would like to work personally with me in 2023 to build, protect, and grow your wealth in the cryptocurrency markets, check out the links in the description. We do have a private group where I teach individuals how to trade the way that I trade, where I share my portfolio and my calls with other individuals, with all of our subscribers as well, and where people have personal access to me 24/7. Otherwise, check out all of our free resources here on YouTube. I have created thousands of hours of content on how to trade technically, how to manage risk, how to codify strategies, how to ideate strategies, how to implement strategies, how to handle emotions, all of these things that are difficult for people to manage. So check out our playlists after this video. If you're new to the channel, make sure to subscribe so you never miss an episode. And of course, links down in the description to everything you could possibly want in life, $30,000 sign up bonus with Bybit, and links to all of our books, guides, and strategies down in the description as well. Ideally, we will be back tomorrow with another exciting episode of the Breaking Bitcoin Market Update leading up to the FOMC on Wednesday. So until then, guys, trade safely, and remember, emotional discipline and risk management pay the bills. Cheers, guys.
Mm-hmm.